Indeed, a very warm welcome to you. This is the Business Hour podcast. My name is Jimmy Mbogo, and today we'll be speaking to CPA Sammy Aloyo, who is a director at ACCMAK Global Consultants, about some of the tax issues that you need to find in terms of your tax solution for your SMEs, as well as tips on how you can be able to market your SME. But before going into that discussion, here's your business tip for the day. And it says, whether you think you can or whether you think you can't, you're right. That's by Henry Ford. And as promised, I'm currently joined by CPA Sammy Aloyo, director at ACCMAK Global, to be able to join us in this conversation. Sammy, karibu sana to the program.
Thank you so much, Jimmy.
All right, and I think one of the first things, Sammy, that I want to understand from where you sit in this industry, we've had a lot of complaints from SMEs saying they're being overtaxed, saying that the current tax regime in the country does not give them room to be able to grow. What are your sentiments?
When you look at the tax regime in Kenya, especially in East Africa, it's true that the tax regime is actually giving us higher burden. The SMEs are having a higher burden on the tax. The taxman has actually placed our taxes higher. When you compare ourselves to countries like Rwanda have a simpler tax regime that offers a lower rate, which means they are attracting more investors. So in this country, yes, it's true that we have a higher tax regime, and I believe it's because the government has high loans they need to pay. I believe in the next maybe coming years, government should reconsider the tax rates that we have.
Because again, when you look at most of these SMEs do not reach the 5 million turnover of every year, and a lot of them are saying that first of all they're being targeted, and they feel that the amount they're being charged in terms of tax is way beyond what they actually can be able to meet.
You know what the government has done of late? the post-COVID, during this COVID-19 period, the government has introduced turnover tax. So when you look at the structure of turnover tax, it enables an SME or a business person to pay 1%, which is a lower tax, compared to 30%, which was corporate tax. So it gives businesses time and leverage also to plan their processes, because 1% is on the gross sales, and you don't have to do an audit at the end of the period for you to pay taxes. So it is one and off payment. So I believe the government is looking into ways to streamline and easy out the tax burden that it has on the common man.
But again, we've also seen a number of tax reliefs that have been put in place. Do you think going forward this is going to help?
Yes, going forward this is going to help, but the hunch is, will the government change its hand? Because these are political moves in political regimes. There's a high possibility that the incentives the government has given in this period, they might change the next year. So I believe what the government should do is be consistent and give people a period of like 5 years when they give their tax incentive, so that people can actually have a period to relax and invest and reinvest part of the money back to the business.
There's a school of thought that actually believes that one of the reasons we do not have FDIs coming into the country and basically supporting SMEs is because of the current tax regime. They feel that SMEs are sort of on a higher risk.
All right. Like I said earlier on, the taxes in this country are higher. So they give foreign direct investment. People coming from outside to invest into this economy have a high turnover. They need to invest more in taxes, more than the process of the business. That is why when you compare countries like Kenya and Rwanda, even in East Africa like Tanzania, Kenya has a high taxation, especially when it comes to foreign investments. So most foreigners are actually chipping out of the market, and they're going to countries like Rwanda to invest because the tax is low, the operational taxes are also low, and even the corporate taxation is low.
So, Sammy, there's also the fact that a lot of foreign investors are sort of shying away from coming into Kenya because of our current tax regime. From where you sit, how then do we make sure that we improve our tax regime to have these foreign investors coming into the country, investing in local companies and also in local SMEs?
Like I told you before, this country has a high tax regime, and there's a high taxation imposed on foreign investments and also foreigners. I believe the government should look into reducing the taxation on foreign investments into this country, so that by the end of the day, we have more investors in this country, because we're also competing with other corporate countries like Rwanda, Tanzania, Uganda. So we need a strategy whereby, because Kenya is a hub, is actually an industrial hub in East Africa, we need a tax regime regime that favors both local and foreign investors. So at the end of the day, even if a foreigner comes and invests in a local company, the taxes are lower enough for them to make profit and employ people. So at the end of the period, you have a widened tax base whereby you'll charge VAT, you'll charge pay as you earn, you'll have NSSF, you'll have NHIF. So that is the thing the government should look into, such structures to lower the burden on the foreign investment, not just in the EP7 section. Any corporate institution, local corporate institution invested by a foreigner should have a lower tax advantage so that foreigners can come in and invest in this country.
There's a school of thought that, and especially with young entrepreneurs and SMEs that are coming into the market, there's this question that they always ask: Why is it important for me to have a tax plan?
So tax planning is essential in your business because initial tax planning into your business, it enables you to set a pricing. Tax planning makes you put a pricing whereby, for example, if you are having a consultancy firm, it's 5% consultancy fees. So at the end of the day, the taxman has been taken care of. So at the end of the period, what young SMEs people need to do, they need to have a tax planning, one, so that they can set their pricing. Two, so that they can be in tandem with the local tax infrastructure in the country. Three, so that they can have limited time to run around trying to convince the taxman on issues of taxes, and they'll concentrate on their businesses.
Okay. Yes. And again, Sammy, just still remaining with the issue of tax, is the fact that most of these young entrepreneurs are people who probably haven't been filing tax themselves. Someone has just come out of campus and they're thinking of trying their hand in business. How important is it to have a tax compliance certificate?
A tax compliance certificate is good because it enables you to carry out businesses, and it gives your suppliers or your customers confidence in what you're doing. It also gives the government confidence in the company that you're running. So at the end of the day, the tax compliance, for example, if you just come and you have tax issues, what you need to do is have a tax plan. The tax plan has essential key areas depending on the level that you're starting from.
Okay.
If you're coming fresh from campus, you want to start a fresh business, then you need to have a personal taxation aligned to the taxman's requirements. Then you have a tax plan for your new business. So when you have a tax plan for your new business, it means you'll pay taxes on time. You will not have tax evasion. You will not have running around with the taxman. Your pricing will be okay, because the tragedy that many institutions have in this age and era is they do not plan their taxes well. You put a pricing that does not favor taxation. So at the end of the day, for you to remain afloat or for you to break even, you have to have issues and you have to evade taxes in an illegal way. At the end of the period, when the taxman catches up with you, it erodes your going concern as an institution. It erodes a reputation before your clients, and also it gives you a bad name to the government. So rather, this moment, the government is giving priority to young women and the youth. So if you have tax issues, that means that you'll not be able to take advantage of this scheme that the government has. Okay.
So when you look at this as a way of sort of improving investor confidence, how important, how big a role does tax compliance play in terms of just boosting your investor confidence? And even when you're doing a pitch, for instance, you want to be a government supplier, how much of a role does this play?
Tax compliance plays a very, very big role. It plays a very big, because it's your ticket to the government, because the government procurement demands that you have a tax compliance certificate. A tax compliance certificate also gives assurance to your suppliers and customers that if they engage with you, you are tax compliant, because your tax compliance will affect their business. For example, you're trading in vertible goods. Your customers will be happy to know that you're actually compliant in VAT, because at the end of the day, they'll have credits that they can use to reduce their tax burden on the other side. So it's a crucial thing to have a tax compliance certificate and ensure that you have a tax planning in order so that your businesses can run smoothly and effectively.
All right, so Sammy, let's talk about assessing risk for an SME. You're an investor, you've come in, you're going through the books of this company. What are some of the things that you will be looking at in terms of risk to be able to know whether this is a company you want to invest in or not?
One thing you look at as an investor, you look at the balance sheet. And you look at something called thin capitalization. This is where if a company is using more debt than actually capital to run the company, then that's a risky company. Then you look at if the company is valued at the NSE, look at the shareholding, look at the trend of the shareholding, the value of the shares. Look at the value of the shares, how they have trended within the last 3 years. That is another aspect. Another aspect is human resource capital. What kind of human resource capital does this company have? That means not only just using the audited reports, that means you also do an internal research and an internal audit to this company. An internal audit will be able to understand things like human capital, you understand how their compliance with the statutory obligations, how is the compliance with tax compliance. You'll understand what is their structure, what is their vision, where are they so far in their vision, are they implementing their vision. You'll understand what kind of debt do they have, is it debt that is manageable or is it fictitious debt. You look at the revenues of the company for the last 3 years, you look at how they have performed, are they growing, is it going down. Then the key thing, you look at the industry that this company operates, how is it? Is it in an industry that is giving advantage to the operation of the company? Or is it an industry that in the next 5-10 years is going to dwindle and it's going to crash? So those are the things that you look at when you want to invest in a company.
Okay, and again, that would normally happen, especially when you're investing in a listed company. But what happens to an SME? This is a startup, probably has a lot of potential to grow. What are some of the things that you want to look at before investing? Because again, it's you'll find that most SMEs are not even audited in the first place.
Yes. Now, if it's an SME, it's a local SME, and it's a startup. You look at the vision of the company. You also look at the industry they are in. Is this industry, does it have capability of growth? Then do they have enough human resource capital? For if you're buying shares in this company, what are you going to put in? So you also look at what advantage you're going to place in that company for it to grow. Are you getting preference shares? Are you getting ordinary shares? And the ordinary shares, if you're getting ordinary shares, do you have input in the management? Do you have a say in the operations? So the key things that you look up for in a startup, especially the industry is key, their tax planning is key, and their vision is key.
Let me take you slightly back in terms of when you're starting an SME. One of the things that most people will do is just look at your recurrent expenditure. How much are you spending? How much are you making in terms of your revenue and your return on investment? Not most SMEs are in that level of using IFRS 9 in terms of accounting. So what is the best way to be able to manage your books as a startup?
As a startup, you need a financial consultant or a bookkeeper, because most startups don't have money to employ. But we have avenues. We have bookkeepers that are actually integrated. They have experience. They can help you manage your bookkeeping as you start and give you direction as you move forward. Also, we have companies and we have certified public accountants registered with the SPAC that can help you in tax planning at that early stage. So if you have a company and you're having an SME and you don't have power to employ a good accountant, you can look at a practitioner who's been there in the market and who's doing private practice.
But the question is, at what cost? Because remember, for most of these SMEs, their biggest issue is they don't have the money to spend.
So a good practitioner, a good consultant is that one who will look at your books, help you in improving your sales, help you in improving your revenues. Out of that which you have improved, that is where you pay them. We have, in practice, we have practitioners who will charge you as low as 5,000 a month for bookkeeping. It depends with the number of the transactions that you have. But as you grow, you'll be able to grow with them and you'll increase that value to the extent that they will be paid what they are satisfied. So it's about growing. It's about introducing a good person who will help you grow in the nature of your business.
All right, Sam, I want us to switch gears now and talk about things to do with marketing and especially marketing SMEs. Again, from where I'm coming from in terms of my understanding of SMEs is they do not have these huge budgets that you'd find with the likes of Safaricom or any other big company. So how do you sort of make sure that your startup is visible out there to your potential clients without spending so much on advertising?
In terms of marketing, marketing is embedded in finance. So it depends on the return on investment you want to have on your marketing. It depends on the impact you want to have. For startup, digital marketing is a growing industry. That is where most SMEs and startups should focus. It is cheap, it is manageable, and it's something that even the entrepreneur himself or herself can handle. That means using Facebook, having a good branding, having a good logo, having a good website, having personal selling. At this day and age, personal selling is still the best key marketing tool. So if you have personal selling and the work output that you put there, referral from clients, that is the best marketing for small SMEs that are actually having a startup. I don't have big budgets for marketing.
All right. So, and you've talked about the issues of logos and just branding as a company. Yes. And one of the questions that comes to mind is, what do I need to capture in my branding? If I'm going to do this marketing, what do I need the customer to capture?
You need the customer to capture the feel of the vision. When you look at your logo needs to express what you almost intend to express in a plastic way to the customer. Yeah. So when a customer looks at your logo and your branding, it needs to give him or her a plastic feature of the kind of institution they're getting into. So when you look at the logo, you need to look at it in terms of, does this logo appeal to what I'm trying to sell to the market?
Yeah.
Yes.
All right. And you've also mentioned something about going online and using Facebook and other social media platforms. But the question is, how effective are they?
They're very effective, especially when you start building a brand. It's not easy to build a brand. It takes time to build a brand. Yeah. So most of these customers that are going to get, those ones are going to impact positively into your business, are referrals. So as an SME, you need to understand that as you begin to build your brand, most of the customers that you will get are your referrals. The other customers that, because the referrals you will have are the ones who boost your social media marketing. Yeah. If you post something on Facebook, a client that is satisfied will actually want to retweet it or actually post an additional value to what you've added. So that gives you confidence and it gives other customers confidence. So this is the build up to your brand. It's not an easy thing. It's not something that will take 6 months. It's a thing that will take a period. Yeah. Even as you grow into experience and understanding the nature of the industry that you're in. But this is the cheapest way to market your business as a startup.
All right, but again, Sam, you can have so many people being able to see your products online. But the question is, how then do you convert these eyeballs into clients? How do you get them to now put their money? And let's say you're selling shoes, how do you get this person who's seen this shoe online to come and buy it?
That means value. Yeah. That means referrals. So a person who looks at you online will be able to understand, and having a very nice website, when they have an interactive website. Interactive website is whereby, it's not a static website. An interactive website is whereby the client can come online and they can have an interactive session with you. If you have placed shoes, for example, as you're saying, shoes online, a person who sees that shoes, you want to convert that person into a payable client, then you need to appease that client. That means when they see that shoe, they'll go digging into your personality. They'll dig into your website. They will dig into the number of years of experience you have. They'll dig into the quality. They'll look into the reviews that you have. So all these things build up, and these clients, if you have a registered office, it's an advantage for you. If you're doing it online, that means you have to be visible. And most people, if you're doing it online and you don't have a registered office, you'll have to have good referrals for you to make business.
Okay, what do you think is the biggest fail for SMEs in terms of branding?
In terms of branding, is not selecting your brand well and not working with a brand expert. Okay. Yes.
So that is one of the things that
that is one of the mistakes most SMEs do, because you have an idea, you don't want to involve a branding expert to help you transform your vision or the idea that you have into a workable solution that will be attracted to your market.
Okay, because again, you will find, for instance, that we are, let's say, in the shoe business again, but you have the same players such as Adidas and Nike, and you have these customers that you're trying to convince that your product is as good as these other alternatives, but there's also that fear of a new brand. How do you handle that as an SME?
You know, as a market, the market is built up. Yeah. All markets have niche markets. Adidas has their own niche market. So what you need to do as an SME is to clarify and find your own niche market. A market that you will appease to, they will like you, and you'll be able to transform them into just not only clients, but loyal customers. So there's every niche in every market. So as an SME, what you need to do is you need to look out, what kind of niche market do I attract? Then from that perspective, you also know what kind of marketing will I able to do to attract this niche market. The market is never complete. Yeah. If you have a new entry in the market this day, you'll have a niche market of your own and you'll make business.
Okay. Yes. So I'm going forward in terms of just looking at how SMEs can be able to grow themselves and gain that brand recognition. What are some of the things that they need to look at? Is it the channel that they're using to market their items? Is it something that they need to look at internally in terms of their management? Or what does it take to just be able to build this brand that is recognized out there, aside from time? Because again, time could be 1 year, it could be 5 years, but still you'll find brands that are coming up and taking off in a couple of months.
What you need to look at is research. at the inception of your SME.
Yeah.
You need to have a good research for your business, for your brand. In research, you'll have strategic group mapping. Strategic group mapping is whereby you know how to position and where to position your brand. You'll research on your niche market. Researching on niche market entails knowing the kind of people you want to sell to, their kind of income, the pricing that they will be comfortable in giving out for that kind of service with that kind of product.
Yeah.
So once you understand these dimensions, then you are free to sell into the market, because that means you will either sell to the market cheaply, attract your niche market, and retain them as loyal customers. So as much as you do that, you'll be able to have a space to grow. It might take, some people might take 3 months, others might take years, others might take immediately. So it depends on the kind of research you do before you launch your product or service.
All right, Sam, I know you're big on numbers and accounting, and this question that we get so often in terms of when do I know this is the time to invest back in the business? So do I save this after taking care of my recurrent, or do I invest it in the business again?
You need to look at the business cycle. What level business cycle are you having? So if you are a startup and you're having high profits at the beginning, you need to evaluate. Do you take advantage of these high profits within this period that you have high profits? Or do you go to save? Because there are some business, depends with the industry. There are some businesses when you pick up, the high profits will be there for some time. Others will just be there for a very short time because of competition and new entrants into the market. So you need to understand this dimension for you to be able to understand, do you invest back? Because you can invest back and lose the money. You can invest back and double your profits. So you need to understand what level of business cycle are you having in an institution before you make that decision.
All right, because again, there's also this fear normally that, let's say there's this item, like I'm going to give you the example of quails. And you remember when that wave came and everyone was jumping on that quail business, but then suddenly no one now talks about quails. So there's all these investors who are entrepreneurs, but they go with the wave. What is the risk in that?
That is high risk. It can bring high return. It can bring a big fall. We have two ways. Entrepreneurs are risk takers. So if you have an entrepreneur who risks into this business, they need to understand the dynamics. You need to research the dynamics and understand for how long. So for how long is the key thing for an entrepreneur to assess. So if you're entering into this, like the quail business, there are many people who made a kill and they made money. There are those who went in and now they're crying into losses. So it depends on the timeline. So the timeline that you have is the key factor for you as an entrepreneur.
When do you know this is time to get out of the business and start something new? Or do I just continue bleeding and hoping that one day things will turn around?
So at that point in time, you assess your business. In the business cycle, you assess your business. Are you going down? Are you at the recession? Are you at the recovery? So if you have stayed at the recession for too long, you assess your market. You assess, do I have competition? This competition, what kind of competition am I having? Why is the reason why I've gone into a recession? So at that period, you evaluate yourself. Then you make a decision. Do I need to pump more money into the business so that I expand it? Do I need to increase marketing so that I can get more clients? Or do I need to exit this business and open a new business? So it depends on the analysis that you will have and observation of the market. And also it means as a key entrepreneur, you need to look at your clients. You need to have feedback. You need to understand how are your clients feeling about your business. It could be that you have poor services. It could be that you have poor customer care services. So once you do this analysis at this level, you'll be able to understand, do I reinvest? Do I pump in more money into this company? Or do I close off? Or do I sell this business and open a new business?
But Sam, let's talk about the issue of liquidity for a minute. And you'll find that most SMEs have their wealth in assets and not liquidity. But there's also this field. For instance, what happened this year, coronavirus came, and suddenly, if you are not liquid enough, you have been struggling through and through. So how do we find that balance in terms of you're liquid, but also you've sort of matched your liquidity as well as your assets?
Right. We have, depends with the kind of industry you're looking at. You might have an industry that is highly liquid. An industry whereby selling off the assets that you have because you have monetary assets is quickly. We have industries whereby the asset that you have is going to take a long time for you to sell, for you to recover or exit the market. So what you need to do is, for example, if you have a business that has assets that are non-liquidable, you need to look at options of securing these assets with a bank finance. So at this level, if you'll be able to use the asset to secure bank finance, then you'll be able to roll out. People in this coronavirus, those ones who have non-liquidable assets, people have gone to the bank, they've used those assets as collateral to get loans. These loans are pushing them. Some they'll push them until 2021 when the business starts coming out. Some of them, it has enabled them to restructure and reinvent their business to attract clientele into in this coronavirus period.
All right. So, Sam, as an investor, where do you see yourself putting your money?
Wow, as an investor, as a consultant, I'm looking for keenly at cryptocurrency.
Okay.
Cryptocurrency, when you look at the financial part of it, the investment part of it, it depends on what you're looking at. I'm actually advising my clients, some of them into this direction.
Okay.
Shares, liquidable shares, and very, very good shares of companies are actually operating well into the market. Also looking at the industry at large. Whatever it is that the clients could do, it depends on what they understand and what their focus is and what their niche market could bring back to the business.
But I'm sure, okay, you've talked about crypto, and I was thinking, how long will it take for Africa to get there where we're investing in cryptocurrency? But that's a conversation for another day, unless you have some final thoughts, Sam?
Final thoughts, I'd say for entrepreneurs, tax planning is key for your business.
Yeah.
It is essential for your business, essential for your growth of your business, essential for your pricing, essential for your growing concern as an SME.
Okay.
If you find yourself in a tax dispute, you need not panic. You need to look for a good tax consultant who will help you navigate through the way. When it comes to marketing, planning is key. You need to attract the right clients, the right niche market for you to blossom into the market. Then you need to assess your business cycle at any given point in time. So that if it is a recession, you understand what you need to do. Do you need to save more? Do you need to cut costs? If it's a boom, do you need to reinvest money back to take advantage of the boom? Or do you need to close up and start a new investment?
All right, and I'm sure we'll be reaching out in the near future just to be able to look at some of the solutions that SMEs and also entrepreneurs can look at in terms of going forward and post-COVID recovery. But Sam, thank you so much for taking the time to speak to us, and that's how we wrap up this episode of the Business Hour. And remember, every hour is Business Hour.